T-minus 7, 2, 5. We have liftoff.
Well, that's what we do. We fight. What do you want?
It's not that simple.
What do you want?
Why are you stepping up on me like that? What's up? KB.
Hey everybody, it's Eddie from Tokyo. This is your cryptocurrency update from Japan, and that video was released from Gemini, the recent exchange to list XRP. Yeah, take your emotions out of whether you have distaste for the twins. As an XRP holder, you want added liquidity, and that listing does just that. Gemini did, however, have a serious glitch where on their trading site yesterday, the XRP digital asset spiked to $50. Oops. Thursday night, I was able to attend the XDC SBI Zoom webinar, and I have 5 key takeaways. I think Mr. Kitao of SBI liked them too. He retweeted this. So first off, XDC has partnered with IMDA. That's Singapore's statutory board under the Singapore Ministry of Communications and Information Agency for compliant digital trade. And what this allows them to do now is develop a comprehensive solution where they can bring to the market verifiable certificate of origin documentation and transferable bill of ladings. Secondly, by digitizing these documents, up to 20% is saved on a single container. That's a lot. That's a lot. And it also provides this end-to-end traceability. And they also reduce risk, so insurance can be mitigated by underwriters restructuring how cargo is priced. At number 2, there's a lot of alpha in there. And then the third key takeaway was there is faster transaction settlement, of course. You know, you're talking about just maybe a day versus 30 days. And the fourth one, it reduces cost for compliance checks. Yeah, I think we have this same sort of speed happening in KYC for DLT payment providers. And then the fifth one is the trade industry uses roughly 28 billion documents a year, and digitizing these documents is saving an estimated 2,850,000 trees annually. That was a new stat for me.
A couple years ago, the SEC filed a lawsuit against Ripple Labs, which is the issuer of XRP, which is one of the biggest cryptocurrencies in the space. So in this lawsuit, the SEC asserted that XRP was a security and that Ripple was issuing an unregistered security, and therefore should be the law should apply to them. And so what happened in this court case, however, was a monumental decision for the space. So Judge Annalisa Torres, she actually ruled that when XRP was first issued and sold to institutional investors, it was then a security. But after that, when XRP was sold on crypto exchanges, you had a lot of retail investors buying this asset, not knowing that it was tied to a specific company. And so by that definition, it actually didn't meet the criteria for a security. And so that has huge ripple effects, if you will, for the industry itself, because the implication, if that ruling stands, is that the majority of crypto assets sold on crypto exchanges like Coinbase or like Kraken, for example, against what Gary Gensler has said, that those are all securities, they are actually not securities. And so it's had a lot of really large implications for the space going forward. And it's emboldened the crypto industry. It's been notched as a huge win for the industry, and it's hard to deny that it is.
Well, thank you, Sam Lyman, for getting it correct. Yeah, you're a contributor at Forbes, and keep up the good work. All right, let's hear a clip from Mike Novogratz. This was interesting. Again, another little stat I did not know about.
You are one of the leading advocates in the world for cryptocurrencies. You've made a fair amount of money. It is reported in cryptocurrencies. I assume you've lost some when it went down a little bit. But what propelled you to be interested in cryptocurrencies? When did you first get interested in it?
You know, I got a call from Pete Brigger, who was actually my partner at Fortress, who was probably the least likely to call you about cryptocurrencies. But he had moved to California, and everyone was talking about a thing called Bitcoin. So he called me up, he said, what do you know about Bitcoin? And at that point, I knew nothing. And so I did a quick dive into it. and quickly realized it's a macro asset. I've spent my life as a macroeconomic investor.
So you got started, you bought initially what?
You know, I bought, it was trading at about $100, $95.
You mean for Bitcoin?
For Bitcoin. We ended up calling Dan Moorhead, who had run a hedge fund that I had backed, and said, Dan, look into this. Like, we're thinking about this. And Dan came back and said, this might be the most important innovation of our lifetime. I was like, whoa. And Dan went to Princeton with us. He put a lot of money into it. And, you know, I was a lot richer than Dan at the time. So I said, I've got to put at least that much in. And so we bought a substantial amount, you know, about $3 million each.
$3 million of Bitcoin, and Bitcoin was $100
At
a Bitcoin?
$100, yeah.
And Bitcoin is now, I think, around 31,000 a Bitcoin?
Roughly 30,000.
And it went as high as 70,000 at one
Yes.
point. So when it went from 70,000 to 16,000, were you getting nervous?
You know, it went from 8,000 to 70,000 as a response to COVID, as a response to the reaction to COVID, right? When every central bank in the world just flooded the world with money. As a macro asset, it was supposed to go up and then come back down, and it did. It went further than it should have, because in the excitement of building this crypto industry, we attracted a lot of frauds, you know, bad actors, criminals.
Well, there's one person I interviewed once, I met about a year or so ago, named Sam Bankman-Fried. Were you shocked at what happened there?
You know, yes. And I spent a lot of time with Sam. I didn't invest with him. I always thought their valuation was too high. But he was kind. He was always helpful to me. We lost money. We didn't invest with them, but we used them as an exchange. And people ask me, well, if you didn't invest, you were a little leery. I was like, I just never assumed I'm dealing with a sociopath.
I want to point out that Ripple is not the only blockchain company that the BIS task force has added to their list. Those of you that have been in the space for a while, I'm sure you know about Finality. I think it was about this time frame, around the summer of 2021, that I started to pay attention, especially when the headline here said Ripple lurks as R3 in Finality, aka the XRP killer, powers new FX swaps platform. It was in May of this year that Finality was mentioned on the Federal Reserve of Atlanta's Policy Hub documentation. Finality is an active member of the Ethereum Enterprise Alliance, and they boast now of 16 major institutions as shareholders: Banco Santander, BNY Mellon, Barclays, CIBC, Commerce Bank, Credit Suisse, Euroclear, ING Group, KBC, Lloyd's Banking Group, Mizuho Financial Group here in Japan, MUFG, which is also in Japan, the NASDAQ, Nomura, which is Nomura Securities here in Japan, Sumitomo Mitsui Banking Corporation, also here in Japan, State Street Corporation, and UBS. And also, they're missing Mizuho Bank. That is another bank that has recently joined, also from Japan. They're moving forward with instant settlement, interoperability with any blockchain. Participants have a single pool of liquidity to draw from each currency. No central server, and expected to go live, they say, in 2023. It's all very interesting how they have chosen to solve the cross-border payment and eliminating correspondent banking partners that require pre-funding for each. You can find them at finality.org, and initially they're going to have 5 currencies: the Canadian dollar, the euro, the Great British pound, the Japanese yen, and the US dollar. Further currencies will be added in due course, it says. They've had a big collaboration with Fintium since 2019. Fintium had a big press release on August 8th where they are progressing to go live, and it's all about the FX swap and intraday repo market for their collaboration. So just keep an eye on this group because they are making moves. Jeremy Allaire of Circle, the CEO, revealed that 70% of the USD coin adoption comes from the non-US markets. This is so interesting. And I've got a clip with Brian Brooks speaking about an opinion piece that he wrote in the Wall Street Journal on the 9th. And stablecoins, in his opinion, can keep the dollar as the world's reserve currency. I do believe he's right. So until next time, do take care. Sayonara for now. Bye-bye.
I see your latest op-ed article in the Wall Street Journal is titled Stablecoins Can Keep the Dollar World's Reserve Currency. Blockchain-based assets could be to finance what Voice of America has been to U.S. diplomacy, the article reads. Tell us about your latest article and assessment of what's happening in the crypto world.
Well, Frank, I appreciate that question. You know, there are a lot of things that keep me up at night, unfortunately, because there's just so much to worry about in the world right now. One of the biggest things that everybody ought to be worried about is the rest of the world is engaged in what we call de-dollarization. What that means is most of the world for the last 50 years has settled their trades, they've bought their oil, they've engaged in international finance in dollars. And that is because the dollar was the most stable currency, and after World War II, it was the one ubiquitous currency of the strongest economy on the planet. All of a sudden, big economies around the world, Brazil, Russia, India, China, South Africa, are doing everything they can to price their new trade deals in their local currency or sometimes in Chinese currency. And that's a really scary thing for Americans because the dollar's status as a reserve currency is what allows us to borrow cheaply and to finance this massive amount of social spending and infrastructure spending that we're doing in this administration. So a strong dollar in the sense of a reserve currency is really critical. My point in the op-ed in the Wall Street Journal this morning was, even though there are governments that are trying to de-dollarize, what's been really interesting is the people in those countries are clamoring for dollars. And the reason is because inflation in all of those countries is far higher than it is here in the U.S., even in this high inflation environment. But they have no ready ability to save their wages in dollars because they can't get a dollar bank account. That's where stablecoins come in. Stablecoins are like traveler's checks or prepaid cards. They may not be a bank account, but they are fully backed by dollars. They're redeemable by dollars, and they can be bought on the internet by somebody who doesn't have a U.S. bank account. And so more and more you're seeing residents of these kinds of countries, let alone countries like Venezuela with its 100% inflation rate, wanting to save their money in a dollar equivalent. So the great thing about stablecoins, as I say in the article, is this is a way of the U.S. to communicate its monetary policy to foreign countries that don't want to engage with us on trade or on financial sort of bilateralism. And that's a really good thing. So it's a classic example of crypto actually solving a problem.